Dubai Islamic Bank, the largest Islamic bank in the United Arab Emirates, saw its full-year profit grow to 4.39 billion dirhams versus 3.29 billion dirhams a year ago. The company is proposing a dividend of 25 fils per share for 2021. To delve deeper into the results, let's get out to Adnan Chilwan. He's the Group CEO of Dubai Islamic Bank. Adnan, the key word is liquidity. And when you look at your balance sheet of the last quarter, where would you highlight a pocket of strength that gives you optimism about what you can do in 2022?
Thank you, Yusuf. Obviously, you've started by saying that we've had fantastic results in 2021. Just coming out of the pandemic, I think the bank has done well. Liquidity has always been the key strength of the bank. Throughout the years gone by, we've always been adequately capitalized as well as adequately liquid, and that has been the pillar of our growth story. We see that in 2021, we've ended the year quite well, not just in terms of overall balance sheet, but in terms of liquidity. And that gives us a good start to look at originating business even in 2022.
And then good to see you again. It's been a while, so we've got a lot to get through. Obviously, the dividend payout is very stable at 50%. Other banks are reaching beyond borders, beyond the UAE into Egypt. I'm thinking about FAB. You have the balance sheet, you have the cash, and a conservative payout ratio. Are you actively looking to expand DIB beyond and into any new markets?
Yeah, international expansion has always been a key part of our core strategy. As we speak, we operate in 3 markets that we've started operating in a few years ago. We call them as the PIC region: Pakistan, Indonesia, and Kenya. These are markets from where we sit. They try and connect the dots from, within an 8-hour radius. We will be focusing on growing our presence in these markets, both organically and inorganically. And some of the markets you've alluded to have been on our radar. Typically, Egypt, the neighboring Saudi market, as well as Turkey. These are 3 markets that one cannot ignore. Having unveiled a 5-year strategy from here on, we are looking at the next 5 years, and we anticipate that not just organically within the country, but we will look at organic and inorganic growth outside the country in some of the markets that we currently operate in, as well as some of the markets that you alluded to.
When I look at what the analysts are saying about the prospects for your stock, I see a slightly bullish tilt, 9 buys, 2 holds, and 1 sell in the Bloomberg survey. In terms of the potential headwinds, Adnan, and that's something that came out in the last couple of days, and it's the corporate tax that could be initiated in 2023. We understand that Dubai Islamic Bank could be one of the lenders mostly affected. What are you doing in terms of provisioning, in terms of mitigating buffer strategies to kind of offset that?
Well, I think it's a level playing field for everyone. I don't anticipate Dubai Islamic Bank will be the only financial institution that would be affected. For starters, a corporate tax regime is welcome. It's a sign of a maturing and developing market. The UAE has done well in the last decade or so. And if you look at a more progressive look, corporate tax regime is something that is not new within the region. Probably we within the UAE are late starters here. When you look at what has been announced already in terms of rates, 9% headline rates, legislation will take effect, and probably by mid this year, we will understand a little better as to who's going to be charged at 9 and what other percentages will come in. But if you look at the region and you take a cue from that, at 9%, we are still going to be very, very competitive. Of course, every financial institution and corporate alike have to take provisions and take that within our stride. But I think by mid this year, it would be more clear as to where we stand vis-a-vis what the rate is and what it means to financial institutions.
What will it mean for the UAE, Adnan, the major portion of your business, 9% corporation tax, how it's spread out? Do you think it'll slow the economy? Do you think it'll be a headwind to bringing new headquarters into Dubai and Abu Dhabi? What's the risk from this tax, if at all?
I don't think it's going to slow the economy. One, at 9%, like I've mentioned, we still are going to be very competitive when you look at not just developed markets, but also, markets within the region, within the GCC. 9% is probably the lowest. Of course, we are coming from a back of no corporate tax to 9%. Would it slow the economy? No, not at all. I think, the economy is not just run on weak pillars. These are very well diversified pillars that are fundamental to the core of the economy and have been so. If you look at in 2018, when the VAT was introduced, there was speculation that it would slow down the economy, but it did not. In fact, we've done more business within the UAE post the implementation of VAT. The UAE continues to be a very, very attractive market, lucrative for not just regional offices, but also international offices. And I see no reason why that would not continue.
You say that there won't be a slowdown. I look at the PMI data from the last month, and I can see that the expansion is beginning to decelerate a little bit. Dubai is particularly exposed to some of the global market volatility, perhaps as well, compared to other centers in the Middle East. What can you do then to ensure that you're able to grow? And where in sort of the Dubai and UAE consumer landscape are the big opportunities? What are the trends?
One, is that economy is not going to slow down. What you're seeing, the BMI in the initial part of the last 2 weeks is something that is not going to stay as is. Where do I see growth? I see growth in a lot of sectors. We are seeing hospitality come back. We are seeing real estate come back. We are seeing aviation now come back to its levels, pre-pandemic levels. The UAE and the key sectors that UAE has diversified, specifically in Dubai, where we sit, well diversified over the last couple of years or so. And we see growth in all these sectors. Needless to say, there is growth within the consumer sector also. If you look at, all the reportings that the financial institutions have done, in 2021, we've seen that pre-pandemic consumer levels have now been reached. And we are also seeing good traction in the beginning of 2022. Based on that, we've given some guidance for the year, and we are looking at a upward northbound trajectory across all our businesses in 2022.
Adnan, great to have you with us. And hopefully when we get back to in-person sit-downs around that desk, we'll welcome you into the Bloomberg HQ in Dubai, the CEO of Dubai Islamic Bank.
Looking forward to it.
Look forward to it as well, sir. Take care.